Hi everybody, welcome to the Goodridge Advisory Government Stimulus Explained webinar. My name is Brian Goodridge and I'm the Managing Director of Goodridge Advisory, for those of you who don't know me. So today we're going to go through the government stimulus that is going to support small business. And before we start, can I just have a couple of people type into the chat box to let me know that you can hear me okay? Can everybody hear me? Cool. All right, perfect. Thank you. So we'll get started. So the areas we're going to look at today, if I can get the menu up. Okay, so we're going to look at the SME Guarantee Scheme, the temporary relief for financially distressed businesses, fast-track depreciation, supporting apprentices and trainees, sole traders, ATO assistance, superannuation release, and boosting cash flow for employers. So the first one of these, the SME Loan Guarantee Scheme. So what this is the federal government has guaranteed 50% of loans that banks issue to small businesses with an annual turnover of less than $50 million. These loans are for a maximum amount of $250,000. They're issued for a maximum term of 3 years, and they've got a 6-month initial repayment holiday, and they're unsecured. So that's great news because it means you don't have to worry about finding an asset to secure the loan against. I have been advised that banks will only deal directly with businesses and brokers will not be able to facilitate these loans. Now, I know the government's desperate to get money into people's hands, but I suspect that banks will still go through the usual process of needing businesses to present financial statements and cash flow forecasts and so forth in order to make their assessment of whether they want to make the loan or not. Temporary relief for financially distressed businesses. So what this is essentially giving businesses protection from creditors while they try to trade out of the current economic situation. So ordinarily, if a creditor's owed money and that amount of money is over $2,000, they can issue a statutory demand to the business or the person that owes them the money, and then that person needs to reply within 21 days. The rules are being changed for the next 6 months, so the threshold for being able to issue a demand goes up from $2,000 to $20,000, and the time you've got to respond is increased from 21 days to 6 months. So this effectively gives you, as a business owner, some buffer if your creditors are chasing you, in that they can't start chasing you and potentially shut you down unless the sum that's owed to them is quite a lot higher than what it is now, and you've got that 6 months to reply to them. So given the current situation and what the government's thinking is that the coronavirus issue will settle itself down within about 6 months, so we should be able to get to the end of that time frame, hopefully start trading profitably, and then we can respond with an arrangement to pay the creditors. As part of this as well, the director's duty to prevent a company from trading insolvent has been suspended for 6 months. So what that means is that ordinarily, if a director suspects a company is trading insolvent or is about to trade insolvent, they need to call in the administrators or the liquidators to deal with the company. This will mean that the company can incur debts in order to get through this period before it can start trading profitably again. But keep in mind, it's not about, it's not a free kick in that you can't just rack up a huge amount of debt and then pull the plug on the company. There's other directors' duties within the Corporations Act that would come into play in that situation. And as a director, you'd potentially still be held personally liable. It's just keep in mind this provision is solely so that you can trade out of this situation while we're all getting locked down and everything else. Fast track depreciation. So for businesses with a turnover of less than $500 million, they can access these new depreciation rules. And what these are is that you can get an immediate deduction for assets that are first used or installed ready for use between the 12th of March this year and the 30th of June 2020, where they have a value of less than $150,000. If you buy an asset after 30th of June, so from the 1st of July to the 30th of June 2021, you can claim a 50% tax deduction on that asset. And that 50% tax deduction will also apply for assets that are valued at over $150,000 that you buy in this financial year. Now, from a tax point of view, this is quite an attractive thing to consider, but I just warn everybody that unless you've got plenty of cash and your business can trade reasonably profitably through this period, and those assets that you're buying, you're expecting to get a good return on them, I would suggest that it's probably better to leave this one for the time being, because in this economic situation, I think cash is king, and the more cash you've got, the better you'll be able to ride this period out. Of course, if you are needing an asset for the work you're doing, go right ahead, but I'd be reluctant to buy any assets that we don't especially need at this point. Supporting apprentices and trainees. So the government's really keen to make sure that as many apprentices as possible can keep their jobs. So what they're doing is they're going to pay 9 months worth of apprentice or trainee wages from the 1st of January 2020 to the 30th of September 2020. This will be a maximum payment of $21,000, which works out to be $7,000 a quarter. Employers can register for this from the 2nd of April. You just need to keep in mind that in order to be eligible, the business needs to employ fewer than 20 full-time employees, and the apprentice or trainee must have been registered as an apprentice or trainee at the 1st of March. So if you've got work on where you're looking to put apprentices on, make sure that you're putting apprentices on that were already registered by the 1st of March. Otherwise, you'll miss out on this. Sole traders. So a lot of sole traders are doing it tough at the moment, and the government's recognised this. So they've put out there that sole traders can apply for job seeker payments and youth allowance job seeker payments. And that'll be sole traders, self-employed people, casual workers, and contract workers. Anybody who is eligible for these payments will also be eligible for the coronavirus supplement, which is $550 a fortnight. So the total payment comes out to somewhere around $1,100 a fortnight. Now, keep in mind that you won't be able to apply and successfully get these payments if you're still accessing employer entitlements such as annual leave or sick leave, or if you're getting income protection insurance payments. If you have to apply for this, when you go to do it, you'll need to declare that you're not accessing any of those payments. However, on the good news side of it, they've reduced the means testing and asset testing for people looking to get these payments, and they've also waived the 1 week waiting period that's ordinarily in place. ATO assistance. So the ATO have come out saying they want to help business owners, and so they're looking at allowing payment to be deferred by up to 6 months for payments due on business activity statements, income tax assessments, and fringe benefits tax assessments. They're allowing businesses that are on a quarterly GST cycle, so quarterly BAS lodgements, to change that to a monthly lodgement if there are GST refunds that businesses are entitled to. They're allowing businesses to reduce their PAYG instalment amounts to zero for the March quarter, and then they're also allowing you to claim a refund for any PAYG instalments paid in the September and December 2019 quarters. And just a reminder, the PAYG instalments are the tax for the business that you're prepaying in advance during the year on your BAS. The ATO will be remitting any interest and penalties incurred on or after the 23rd of January that have been applied to tax liabilities. And they say they're going to work with affected businesses to help them come up with sensible payment arrangements that will allow them to pay their debt off to the ATO, but still allow them to have cash flow for trading. Now, keep in mind with this, the ATO have issued a warning that employers will still need to make sure they're meeting their ongoing superannuation guarantee obligations. So that's paying your quarterly super guarantee for your employees, and the penalties that are associated with not paying that are still in place at the moment. The ATO also warned us that unlike the bushfire relief measures, which applied automatically in particular geographic areas, any assistance for this coronavirus assistance they're giving us needs to be applied for. And so that means that as a business, you either need to contact the ATO directly or talk to us about speaking to the ATO on your behalf to get something in place. Superannuation release. So the government has come out and saying that if you're affected by this coronavirus situation, they'll allow individuals to access up to $10,000 of their superannuation in the 2020 financial year and a further $10,000 in the 2021 financial year. In order to apply for this, you need to be unemployed or eligible to receive a job seeker payment, youth allowance for job seekers, parenting payment, special benefit or farm household allowance, or on or after the 1st of January, you were either made redundant, your work hours have been reduced by more than 20%, or if you're a sole trader, your business has either been suspended or there's been a reduction in your turnover of 20% or more. Now, in my opinion, I think this probably should be the option of last resort, simply because depending on your age, if you were to draw out $20,000 worth of super now, that could translate into $60,000 or $80,000 worth of super when you get to retirement age, which could seriously impact your options you've got when it comes time to retire. So if possible, if everything goes badly, if possible, use the other measures to get you through and take this as a last resort. Now, for anyone who's drawing a pension from their super, the minimum pension drawdown rates have been halved, halved for the 2020 and 2021 financial years. So that means that while the stock market's down, we're not having to draw down our capital as much. So that gives it more of a chance to recover when the market recovers. Boosting cash flow for employers. I think this is probably the big one for most of you. This is where there's the most opportunity to benefit from these stimulus measures. And this is for any business with an annual turnover of less than $50 million that employs workers. So essentially what it is that if you employ people, then you'll be entitled to a minimum payment in this financial year of $10,000. And then in next financial year, you'll get another $10,000. So you'll get overall $20,000. These payments are done as credits on your ATO account, so credits on your BAS, and they are not taxable and they don't need to be repaid. In order to be eligible for them, the company, excuse me, in order to be eligible for them, you need to have been employing people before the 12th of March. So the company you're operating through, or if you're a sole trader, employing people has to all be done before the 12th of March. So this is just to stop people manipulating the system. The maximum payment under this is $50,000 this financial year, and then another $50,000 next financial year. So the way it works is that when you lodge your March BAS, you'll get a credit equal to the tax withholding on that BAS. When you lodge your June BAS, you'll get a credit equal to the tax withholding on that BAS. And you'll get the whole lot as long as the total of the two remain under $50,000. In the June BAS, you'll also get a credit equal to half of the total of what was received for March and June. And then in the September 2020 BAS, you'll get another payment, which is equal to half of what you received for the March and June BASs. So minimum $20,000, maximum $100,000. I think there's some opportunities in here to do a little bit of planning about wages and directors' bonuses in order to get you the most amount possible. And as I said before, I think this is the most opportune stimulus measure that they've come up with. So this is one of my favourite posters, keep calm and carry on. And I think that this is essentially the mindset we need to be in now. We need to keep calm. It's a scary situation. It's an unknown situation. We've never been in a situation like this before. There's been other economic crises, but they've never been as a result of viruses or health issues going around the world. And the one that comes to mind that was as a result of a virus, the Spanish flu epidemic in 1918, it potentially wouldn't have had as big ramifications as the coronavirus, because as you know, the world wasn't as interconnected back then as it is now. So the big message is keep calm and carry on. And some tips to get through this crisis. And I'll just run through a few things now. And the first, and I think the most important one, is that your most valuable asset is yourself. So the very first thing you need to do is make sure you're looking after yourself, look after your mental health and your physical health, and look after your family first and foremost. Then I'd say it's really important to speak to your landlords about a potential rent reduction or maybe a rent-free period. Speak to the banks about loan holidays. Worst that can happen is that both of them say no, but I am aware that the big banks have brought out measures to give people loan holidays. There was an article in the Financial Review this morning. Commonwealth Bank was going to allow 6-month loan holidays for people. The other banks were talking about 3-month loan holidays with the ability to apply for another 3 months after that. So that could potentially save a lot of issues around cash flow and paying mortgages. Gather as much cash as possible. So talk to the people that owe you money about getting that money to you and what you can do to help get that money there. Apply for the government loans of up to $250,000. Just get all the cash together that you possibly can, so that way the money's there to help you ride this out. Hopefully you won't need it, but if you do, it's better to have it than to not have it. Make as much use of the government stimulus as possible. The government's handing out billions and billions of dollars. You might as well get what you can get out of it. It might be the difference between surviving or the business surviving this period and not. Manage your cash flow really tightly. So I'd recommend that everyone looks at getting cash flow budget prepared for the next 6 months. Look at the expenses that you've been incurring and go through each one on a line-by-line basis and ask the question, do we need that expense to run our business at this time? And if you don't, cut that expense. This is the time now for austerity when it comes to spending, and we've been through some good economic times where we've been able to let the purse strings out a little bit and enjoy ourselves a bit more and have a bit more things running through the business that perhaps we don't absolutely need. So now's the time to cut back on that. I would also speak to large suppliers about their terms with you. So with a small supplier, they're going to be in the same boat as you. And so they're probably not going to be able to do too much to help you around payment terms or reducing their costs, their charges to you. The large suppliers, they probably will have cash reserves or at least lines of credit they can draw on. So I'd talk to them about whether they can do anything around allowing you longer periods to pay them or around pricing, whether they can give you better prices. I also think it's very important to have a plan for employees and to communicate to them clearly. So each and every one of us that have employees has an obligation to make sure we're looking after them, and essentially we're not just paying our mortgage, we're paying their mortgage through their wages. So if it looks like you're going to have to dismiss employees, have a plan in place around what the timing of that would look like. So if the economic conditions get to this point or my business gets to this point, I need to remove these people from it. Make sure you're giving them as much notice as possible. And I'd also recommend that you give them some information about what they can get from Centrelink, because it's going to, if it happens, it'll be a big shock to them, and they probably won't be thinking too much about that. They'll just be thinking that, oh my goodness, what's going to happen now? Also keep in mind, don't feel obliged to keep everyone on so you can look after them, because at the end of the day, if you keep people on to look after them and your business does go down, then potentially more people lose their job than they need to be. And finally, look for opportunities. A lot of really wealthy people have made their fortune through things they've done in economic downturns. And probably the most famous example that anyone would be able to think of in this country is when there was the recession that we had to have. Kerry Packer bought back Channel 9 and he famously said, you'll only get one Allen Bond in your life. I'm not saying that Channel 9 is going to be up for sale and we're going to be able to afford it, but if you have the right mindset and you look around, you'll find either opportunities now to better look after your customers and clients so that they remain loyal and help you spring back once the economic crisis is over, or you will find opportunities that you can plan for so that once things improve, you can really start pushing those and get a lead on your competitors. So that's everything for the main part of the presentation. If anyone's got any questions, do you want to type them into the chat box and I'll see how many we can answer before we have to finish up this afternoon. Otherwise, Tegan will be sending through an email where you can book a 15-minute call with me so that we can go through all this in more detail, but specifically looking at it in regards to your business. Okay, I'll just give you another minute or two if you want to type any questions in. Otherwise, we'll close it down. All right, if anybody is on the webinar and they didn't get the registration initially and just got the link, please contact Tegan at admin@goodridgeadvisory.com.au so that she can send you the email with the link to book the time.